Now we're going to explore the sustainability of this momentum and unpack new insights from State of Stablecoins in Emerging Markets reports there by Yellow Card. Joining us for this conversation, we have Lansbury Ludimish, Vice President, Global Operations, Yellow Card Financials, and Managing Director, Yellow Card Nigeria. Joining me right here in the studio. It's great to have you. Good morning.
Thank you so much, Ladi. It's always a pleasure to be here.
Fantastic. And you know, I love to talk about stable coins at this point, because stable coins are, well, to some people, you know, it's a huge deal, you know, at this point, being able to send value for a very affordable amount. Sometimes you can send huge money for like $1. That's the cost of sending $1 million. That's possible. We've seen that happen with stable coins, you know, definitely. So we see Goldman Sachs there. They're really optimistic, you know, about what's playing out, you know, so far, especially with the Genius Act. You know, tell me about how you're seeing, you know, all of that play out.
Thank you so much, Ladi. It's actually an interesting topic. We're always excited to jump into it. So with the passage of the Genius Act, we have actually seen so many interests from the regulators and also from organizations, big institutions. A good example is Walmart. Walmart is actually trying to do their own stable coin. And also when you think about financial institutions, what they are doing, the likes of Citigroup, JP Morgan's, everyone is jumping into this ecosystem. They are all trying to have a stable coin strategy, right? Because nobody wants to be left behind. And the passage of the Genius Act actually gives us some level of sense of security, especially to organizations that are heavily regulated and want to come into the space. And what we have seen so far with the report we published recently is that people are using the stable coins not as some sort of speculative asset, right? They are using it to make transactions. They are using it to solve real-time problems, right? And if you look at the economies around the world, the African continent, even the emerging markets, we can see some similarities what is happening. Most of those markets, they actually have issues with FX liquidity. Some do have issues even making cross-border payments because of the cost implications. And if you look at markets like the Latin American region, they have similar issues just like the African region, where we have so many of our brothers out there trying to send money back, and they are encountering heavy costs and also delays. So stablecoin has actually come in, right?
I'm trying to imagine your first stories where you're trying to send maybe $200 back home.
Exactly.
And that costs you what,
about 60?
Maybe half of that.
Exactly.
To send that home.
Exactly. So that is what we have seen people use stablecoin for. Like I said before, they are using it to solve real-time value. And you talked about the hype, right? What happens after the hype?
Right.
I think in my view, we will definitely see growth. We'll keep seeing continued growth in this ecosystem. And the reason being that those problems are still there. Those problems are not being solved by the traditional financial services, right? So because of that loophole, stablecoin is needed. The demand for stablecoin is actually high, right? So even after the hype stage, we're still going to see adoption. And this adoption, you can see with the passage of the Genius Act, we now have regulators that are interested in this ecosystem because these transactions are happening in those markets. Businesses are using it, individuals are using it, and for them to ensure that they also raise tax from that whole transaction, there has to be some sort of regulation. So even before the passage of the Genius Act, we see some markets that are building up their regulations within the African continent, outside the African continent, all over the emerging market. Some do have regulations. Some do have some sort of framework that looks like sandbox, right? Just to understand how the transaction works, just to understand what is even there for us to regulate. Right? In terms of taxes, how do we charge taxes? How do we levy taxes, and how do we even collect it? So regulators are interested. The interest is increasing as the day goes by, right? Everyone wants to jump into this this whole ecosystem. And if you also look at the institutional scene, you can see institutional adoption. We have institutions trying to create their own stablecoin strategy. We have institutions trying to build their own stablecoin, right? They don't want to go with the traditional stablecoin or the famous one in the market at the moment. But you see banks, big banks like Citigroup, JP Morgan, they want to create their own stablecoin, if not for anything, for their treasury internally.
Right, because I remember, when, Bitcoin was created, if you look at that white paper, and definitely they say Satoshi Nakamoto created Bitcoin. We don't know who that is.
Exactly.
But I guess he was trying to take out the middlemen, more like the banks, from transactions. But we're seeing the banks adopt stable coins. I don't know if Satoshi is happy with stable coins, at this point, but the banks are coming in.
Exactly. You know what? The banks will come in, not just the commercial banks, even the financial services, the other financial service providers. You know why? Because if they don't come into this ecosystem, they'll be left behind, right? So you imagine funds moving around and your bank is not having a piece of it. So this is the main reason why the banks want to be part of this whole ecosystem, right? You see funds moving around. Last year, stablecoin transaction in Nigeria alone hit about $22 billion, right?
$22 billion.
$22 billion
in Nigeria,
in Nigeria alone. And as of last year, 2024, the total stablecoin transaction was about $15.6 trillion. Right? You can imagine having these transactions outside the banking system. So the question is, who are those making these transactions? They are bank customers. So why are they not making these transactions through the banks? That's the question the banks are asking. And they can't help it. The only thing they can do is to jump into this ecosystem. We see banks all over the world creating their own strategy, even locally. We see banks coming to us to say, we're interested, what is even happening here? Okay, how can we be part of this, right? Nobody wants to be left behind.
Right.
And if you see Bank A jumps into it, probably have a product, have a solution that is built on the blockchain, built on the stablecoin, Bank B's customer will definitely move to Bank A, right? So for the banks that are not jumping into it, for the financial service providers they're not coming into this ecosystem, they're bound to lose their customers. So everyone still wants to keep their customer base. Not just keeping their customer base, they also want to grow their customer base. So everyone is interested. And the only thing that would help grow this system, right, the only thing that will still help drive adoption in this ecosystem is regulation. Regulation is key, right? And we can see how the United States has taken it up, right? And everyone is following suit. For those that never considered it, for those that never thought, oh, we're interested, for those that even put up some regulatory directive or some policy statement saying, we don't know what is happening here. If you're dealing with them, you're at your own risk. They are coming to learn about this ecosystem, and they're trying to put in the right regulation to ensure that whoever plays in this space is playing in a safe environment, because consumer protection is key. For the regulators, their key mandate is to protect the economy and protect the consumers. So for them to do this, they need to even understand what the ecosystem is all about, and they will then build in the right framework, not just to protect the interest of the consumers, but also to grow the economy, because we can actually grow the economy by having the right regulation, putting in the right framework to ensure that this business grows, this ecosystem grows.
Fantastic. Well, we'll keep watching that growth. But, your recent report, you did reel out some numbers about, transactions, stable coins, for Nigeria. What else is in that report?
Okay, the report generally, we looked at the emerging markets, not just Nigeria alone, right? The bigger picture, the continent, and outside the continent, what is happening in Latin America, what is happening in the Southeast Asia, what is happening in the Middle East, because we share some similarities when it comes to our economy, right? Most of these markets, they do have issues with FX liquidity.
So sorry, it's not just poor countries jumping on stablecoins.
No, not just poor countries, right? Not just poor countries. Because of, you can see some countries that actually heavily dependent on foreign inflows like remittance, they are also jumping on stablecoin, right? Because for you to make those transactions, you have to pay some fees. And if you have to make those transactions through stablecoins, it comes with a lower cost and it comes with speed, right? So not just all about FX shortage, not all about the currency volatility. There are other use cases. People are using this technology to even manage their treasury. Commercial banks, financial service providers are using this technology to manage their treasury internally. So not just about the poor countries. We're not poor in Nigeria, right?
No,
Nigeria
we're not poor.
Is not a poor country,
No, we
right?
are a rich
Exactly,
nation. Yes.
exactly. And as the giant of Africa too, you can see the numbers for Nigeria. So if you look at the report, what we have noticed is like some of the key things we have noticed. You can talk about regulation. You can also talk about the use cases, what people are using this technology for, right? You can also talk about the regulatory interest is on the increase, right? Most of the markets that had some policy statement talking about don't transact with this stable coin in this with this technology, right? They are now trying to build in framework to ensure that they have the right regulation for this ecosystem. So the report unpacked a whole lot, from adoption to use cases, from use cases to regulatory interest in this whole thing, and also the institutional adoption. I think that one is key, right? We're not just looking at individuals adopting this technology, but we are looking at big businesses, big organizations adopting this technology, trying to build in some innovative products on this technology.
All right, definitely, some see some kind of intersection between, stable coins and fintech. That's, financial technology, because it's also technology.
Exactly.
At this point. And, it almost seems like these are very, very early days, when it comes to this stable coin industry. And it seems everybody's still learning. Everybody's still trying to understand what's really going on, here. So, in your viewpoint, how are you seeing that intersection, and what are you seeing in the next, 3 years, for stable coins? And I don't know, for some reason, I keep imagining artificial intelligence and stable coins having some kind of play.
Okay, so if you talk about stablecoin and the fintech, right? I don't know if you're familiar with M-Pesa in the eastern part of Africa. When it came in, right, people kicked against it. Even the telecommunication sector kicked against it, right? So in my own view, I think there is no competition there, right? The fintech, the payment service providers.
Just like we said, there was no competition between fintechs and the banks.
Exactly, exactly. We all complement each other, right? We all complement each other in the right way, right? There are some things, there are some leg of the transaction that we can actually complete on our own, but we need the fintechs to do that. So I can say that we complement each other. The sky is big enough for everyone, and there is a piece for everyone, right? Then when it comes to what I see in the next 3 years, I see more economies developing their own framework, right? Just to ensure that this technology stays, right? And the economy gets the benefit of this technology. In 3 years, I also see heavy institutional adoption, right? I also see some big banks all over the world building their own stablecoin strategy, having their own personal stablecoins, right? And making some of the banking transactions with stablecoins, yeah? And I also see, like I said before, more clarity around regulation, because there are some people, there are some businesses, some sectors that have 1 or 2 innovative products to be built on this technology that are just sitting back watching what the regulators are saying. So for them to even come into the system, they need to have that regulatory clarity that they are even permitted to jump into this, right? So I see that regulatory clarity in 3 years' time. I see heavy institutional adoption in 3 years' time. I also see heavy adoption too like I said, both by individual and also by businesses.
And maybe the guy on the streets too.
Exactly, exactly.
And I was hoping you're going to see, I also see a Laddie Williams backed stable coin at some point. Maybe we'll see that later, but thank you so much.
Thank you.
It was great having this conversation with you. Lasbury Oludimu, Vice President, Global Operations, Yellow Card Financial, and Managing Director, Yellow Card Nigeria.
Thank you so much, Laddie. Thank you. It's always a pleasure to be here.
Thank you so much.